morning. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. And it is an interesting morning here with everything with this Iraq U.S. tensions over there in the Middle East, driving oil through the roof, literally, here on this Monday and over the weekend. And it's affecting a lot of trades out there. Plus, we have some business updates like the Live Nation trial that's been going on. We got some updates for you on that as well. So a lot going on here today. Now, it's not to delay it all. And really quick, just a programming note, because of the time change yesterday, markets now open here at 6:30 Phoenix time, 9:30 Eastern time. So no more pre-market stuff. Let's get right into the actual market report. I don't know why I changed the name of this segment. It's the Market Watch here on this Monday. And as you can see, a lot of fears out there going into the market here early on this Monday. Dow is way down today, 613 points, 46,839. The S&P 500 down 67 points to 6666. Oh, that's a dangerous number there. The NASDAQ is down 214 points here on this Monday, 22,178. Russell 2K not escaping it at all. Even though it says plus on your screen there, that's actually incorrect. That is down 42 points right now. For some reason, our tracker has that wrong here, but that is down to 2477. That number is correct there for the Russell 2K. And then there's Bitcoin. Bouncing back a little bit here on this Monday, right? 3,100 points up, but still under that 70,000 level there. 69,088 there for Bitcoin here on this Monday. What's kind of driving this market change right now? Well, obviously, $100 oil is triggering a lot of fears out there, not just fears, but stagflation fears are now creeping into this marketplace as oil is hitting those high numbers. We'll talk about oil here coming up in our first segment as well. But first, stocks we're paying attention to. And I just told you, oil stocks overall, meaning like ConocoPhillips, ExxonMobil, and them, they are trading higher, of course, with the and it's actually over $100 a barrel, reaching up to $110 per barrel over the weekend as well overnight. So levels not seen since mid-2022. So if you have anything with oil stocks, those are probably up today for you, at least they're early in market trading. But the first stock we're going to pay attention to is called Hims& Hers Health today. And this is up huge this morning here on the market, 41.55% up here in early market trading. Market's been open for about 30 minutes now as well. In pre-market trading, this was trading 51% up at that time frame. Bloomberg News came out with a report, of course, citing a person familiar. But basically, Hims & Hers struck a deal with Novo Nordisk to sell Novo Nordisk's popular weight loss medicine on the Hims & Hers platform. Remember, the lawsuits threatening to happen here between Novo Nordisk and Hims & Hers Health. Well, this deal ends that lawsuit. It's aimed at that lawsuit was aimed to stop Hims & Hers from selling a copycat version of Wegovy on the Hims & Hers Health. Well, a deal's been struck. Obviously, good news for Hims & Hers Health, up 43.01% here on this Monday. Next up, you're going to get into this story in a little bit after we get done with all the stories around the market side, but Live Nation Entertainment is our next stock we're looking at here this morning. They're up big today as well, 5.83%. They were up over 9% in pre-market trading. Well, Bloomberg also reported that Live Nation is nearing a settlement agreement with the Department of Justice. This is that lawsuit that's been going on, the jury trial that's been going on over the alleged monopoly over the live concert industry here for Live Nation and Ticketmaster. So we have rumors of what that settlement's going to be. We'll have that story coming your way here in just a little bit here. But 6.17% for Live Nation based off of, that Bloomberg report here today. And then finally, you might be sitting in line right now listening to the show. Of course, you might be sitting in line at Starbucks this morning. Well, not good news for them here early, 1.95% down. Well, Wolf Research downgraded the stock to peer perform. Wolf Research said it wants to see evidence of sustained execution especially amid the increasing competitive coffee landscape. So, a lot of people have been on Starbucks' wagon here with their growth, with the remodels and rebirth of this company. First signs we're seeing here of a company saying, "Well, it's been good, but we want to see sustained growth here." But that's why Starbucks down 1.93% right now. And when we come back and look at the stock market later on with the Market Watch, we're going to look at the airline stocks specifically. They're not just getting hit with oil prices. If you saw the news over the weekend, or you or somebody you know was traveling, well, you got found out at the airports what airlines are dealing with as well. So we'll talk about airline stocks coming up here shortly as well. But obviously, the big stories here over the weekend were oil prices, and it's affecting the market today, bringing stagflation fears into the market as well. But oil prices did pass that $100 per barrel on Sunday. And I can tell you, $111 here early this morning as well. And it's all because of that U.S. Israeli war that is happening against Iran out there. It's disrupting production, it's disrupting 20% of the oil in the market there in the Middle East as well. So the price of barrel of Brent crude. Now this story is a day old now. That's the international standard Brent crude. Well, it rose to more than $107 after trading resumed on that Chicago Mercantile Exchange. By the way, that's a 16.5% jump from its Friday closing price of $92.69. West Texas Intermediate, that is the production here in the United States. It was up to about $106.22 a barrel. That's a 16.9% increase from when it closed on Friday at 90.90. So like I said, that's early morning over the weekend trading. Here this morning, it's climbed a little bit more as well as the market has been open. So Brent itself climbed 28% as well. West Texas Intermediate, it rose 36%. Those numbers are from last week by themselves, and then another huge increase here this morning here on the market. Oil prices have jumped, obviously, as the war impacts areas crucial to production. And then not only production, but how to get it out of that area, right? So the shipping of oil and gas from that Persian Gulf region. About 15 million barrels of crude oil. As I told you, that's about 20% of the oil that ships around the world are typically moved daily through the Strait of Hormuz as well. So, it's only 20%, but what that does is it's drawing oil prices up in Europe, and they're needing to pull it from other areas, causing prices to go up everywhere right now as well. But it's not just shipping and getting it out of there, but Kuwait, Iraq, UAE, they've all dropped their oil production over the strained ability to export it out there. So production's coming way down as well. Saudi Arabia is trying to do their best. They're increasing shipments from the Red Sea side of that area of the world, but the volumes cannot be kept up and not enough to offset the dip from the more popular side and more busy side here in that Strait of Hormuz as well out there. So oil is becoming a problem because oil affects everything. Everything gets moved by shipments or trains or trucks, boats, and oil prices are going up. The air even is being affected by this. That's why we're going to look at air stocks here coming up as well. So what's being done about it? Obviously, America is producing a large amount of oil here, and it's not going to help it keep it down, as I said, because with the strait being kind of bottlenecked right now, European gas prices are going through the roof. Well, what's being done about it? Well, maybe we'll get a little bit of relief, but it's probably not a ton. The group of seven finance ministers, they're set to discuss a possible joint release of oil reserves here this morning. France, which currently holds the G7 presidency, well, they actually initiated the plans for the call for this specific emergency reason. The French government said in a statement that the use of strategic reserves is actually being considered. So they confirmed that's what the meeting's about here. The Financial Times were the first to report the call. They said that the U.S. did support the idea of jointly releasing oil reserves at the same time. So the U.S. is behind this as well and supporting it. But the people that are kind of talking to the Financial Times out there, they cautioned heavily. No decision has been taken, and so no guarantee they're going to agree to do this as well. Coordinated drawdowns of strategic stockpiles have only been carried out 5 times in the history that this has been available to us. Twice it happened in response to Russia's invasion of Ukraine back in 2022. And then before that, reserves were accessed because of supply disruptions in Libya, Hurricane Katrina here in the U.S., and even during the first Gulf War, the only other times they've done this strategic drawdown of oil. So we'll have to see if we can get a little bit of relief from that here. But the problem is, we're looking at weeks, months remaining on this war. And so we could see sustained higher rates here for several weeks here and even longer coming up from that side. And we'll talk later on in the show specifically about gas rates here in Arizona and what they've done here over the last week and into the weekend as well. So we all know it's gone up, but when you see the actual numbers, it's gone up. It's kind of staggering out there. But let's not just talk about oil and how that's going to affect everything out there. The average national rate for a 30-year fixed mortgage rose to 6% effectively last week. Now it's a small increase. It was at 5.98% last week before it rose to the 6%. Of course, the 5.98 was the lowest in September of 2022. We get all this from Freddie Mac, of course. And here's the thing: 6% is a number where people think it psychologically tells people, I can't afford a house. It's 6%. But at 5.98, they think they can. So that's the psychological number right now that we're looking at. Home loan costs, are far lower than they were even just a year ago. Back then, they were at 6.6%. So even at a 6% level, it's still major decreases from a year ago. Mortgage rates tend to move in tandem, as you know, with the bond market, specifically that 10-year treasury yield out there. The the problem is the Iran war is drawing up global oil prices, making that concern about rising inflation here in the U.S. or stagflation coming in as well. So you're kind of looking at both issues. And in turn, that's boosting bond yields because investors demanding higher returns. Bond yields are safer than the stock market and some of these other money holding or investment things out there. Bonds are normally considered a safe investment, but investors are likely shifting their money to even more stable assets right now, things like money market funds, all because there's serious economic uncertainty out there with this war going on. So even then, they're not switching necessarily, not taking out of the stock market, putting in the bonds, going as far as to money markets and things to that effect out there. So mortgage rates also being affected on what's going on in this marketplace, up to 6% here as well. And we'll see how this stagnates the market at all in terms of house buying. That not that it was going great, but it was starting to pick up a little bit. Now we could have a negative impact coming up as well. And we have all that going on in the world, and we know that the president's tariffs under the Emergency Act were deemed unconstitutional. So they're going back and implementing tariffs under new laws and things to that effect. We know there's another lawsuit on that aspect of it from half 2 dozen states out there, including Arizona. But now we find out that Mexico and the U.S., well, they're going to start talks on March 16th. That's ahead of a review of the free trade agreement that, of course, has shaped both economies and kept some of their commerce steady and out of the tariffs here as well. Remember the free trade agreement between Canada and Mexico kept some of those items not to be taxed in the tariffs by President Trump. So these bilateral trade talks are ahead of that scheduled review later this year. This is that United States Mexico Canada agreement. The USMCA is what we are talking about. The latest version of free trade agreements among the US, Mexico, and Canada. It dates back to the early 1990s. It's been intertwined the economies of all three countries since that time frame. The USMCA has allowed Mexico to avoid much of Trump's uh, tariff measures out there because many Mexican goods are actually covered by the free trade agreement. A number of products aren't covered at the same time, which I'm sure Mexico will want to get covered out there. Things like medium and heavy duty trucks not covered. Those face those 25% tariffs from the Trump administration. Of course, the 50% tariff on steel, aluminum, and copper. That does remain in effect, as that's not covered. And a 17% tariff on Mexican tomatoes, not in the trade agreement. So those have those additional tariffs on them there. So those talks are going to start and heat up here March 16th, coming up here shortly. So look, it's just a lot of information around the governments, which affects the economy, business, stock market out there. And now we have these other things going on, like lawsuits out there. And we showed you the stock here of Live Nation, as that is up this morning here in early market trading. And well, here's the details that we're getting from some sources out there, because Live Nation Entertainment, well, they have reached a settlement with the U.S. Justice Department. So are they a monopoly with Ticketmaster and things to that effect? Well, apparently not as much as originally thought, because Live Nation is reportedly going to be able to retain Ticketmaster. We get this information from Politico as they're reporting this here early this morning. The agreement between the DOJ and Live Masters requires Live Master to pay roughly $200 million in damages to participating states, and even submit to sweeping structural reforms targeting its control of ticketing, venues, and artist promotions as well. Fans and politicians, as you know, have intensified their calls to examine Live Nation's 2010 acquisition of Ticketmaster. And it all started with the Taylor Swift and their fans. Hours long online queues, charging high prices for tickets to that whole 2022 Eras tour. A lot of frustration happened at that time and drove to kind of being looked at here. But folks, Live Nation's been scheming this system for a while. Let's put it that way. And now that's what Taylor Swift takes it to get to this level. The U.S. Justice Department and more than 2 dozen states sued to break up Live Nation back in May of 2024. They were wanted a sale of Ticketmaster away from Live Nation, and also they alleged the company's illegal infiltrated concert prices, as well as harmed artists and kept money out of their hands. Ticketmaster and Live Nation, no doubt about it, been taking the money from not just the artists but fans as well, and collecting it into their own pockets. So under the settlement, reportedly, according to Politico, Ticketmaster will be required to open parts of its technology platform to competing ticket agencies. So base think of other ticket sites like SeatGeek and things will be able to use the Ticketmaster site to list their sites. That's going to allow, by the way, you got SeatGeek, Everbright, Game Time, those types of companies as well. So they're going to be able to list tickets directly through that Ticketmaster system now. So you don't have to, like now you have to list it on each site individually. Now you'll be able to just click a link, supposedly, and list it on all the sites. The agreement will cap Live Nation's long term exclusivity contracts. Those have been the biggest problem here. Historically, they use those to lock in rock venues into its Ticketmaster system. So now the cap is 4 years you're allowed to do that before that expires. Venues will be permitted to allocate a portion of their ticket inventory to rival platforms as well. So they lose that exclusivity, which is the biggest thing, right? You go to, for instance, and I'm just going to pick a place here. I believe they're part of it, right? But you go to, the well, it used to be called the Footprint Center, what Mortgage Matchup Center, right? You can only buy your initial tickets through Ticketmaster, and all those fees. I told you guys before, man. I went to buy tickets for an event coming up this Friday, several months ago. The fees for 4 tickets were as much as one ticket price was, a couple $100. Ridiculous on the amount of fees there. It's because they had that monopoly. So looks like a settlement's coming. Looks like there'll be a little bit of a breakup in terms of allowing more competition into that stranglehold that Live Nation and Ticketmaster had over a lot of venues out there. And good news, and you saw Live Nation stock going up 9% here in early market trading when we looked at that earlier today. And hey, I want to give you a heads up on this because everything's going to be going up, obviously, with the inflation fears and stagnation fears and oil prices going up. If you're in the market for a used car, you might want to be pulling that trigger a little bit quicker than you normally would, because no shocker here, used car prices might be going up as well, or they are going up. Cox Automotive came out on Friday, and they reported its Manheim Used Vehicle Value Index. That basically tracks prices of used vehicles sold at its U.S. wholesale auctions. They say that those sales have increased 4% in February compared with a year earlier. So it's a level of 212.3. That's up 0.8% from January. It marks the index's highest level since September of 23. So if your places that you buy used cars are buying them at a 4% increase in February, that means those prices get passed along to you, the consumer, as well, coming up here. So the buying optimism that these buyers have and the used car dealer has, well, it's fueled by expected higher tax returns for American consumers, which they say that higher tax returns do offset, the bigger economic and geopolitical concerns that are out there on the markets, like free money, people consider it. But the war in Iran does kind of put a wrinkle into this. It introduces risks to the economy, and it may put a huge slowdown on consumer appetite in the short run on spending, even with big tax returns. Used vehicle prices do remain high compared with historical levels, but they're off from those record highs during of course, the pandemic timeframe. That was when resilient demand and low inventories inflated prices to those outrageous levels that they were. Retail prices for consumers traditionally follow changes in wholesale prices, obviously. So that's why we're looking at a 4% increase in that buyer optimism here by these companies. The average listing price for a used vehicle in January, well, it was 25,533,000. That compares to more than 28,000 in 2022. So you can see it's down from those historic records, but ticking up again. So if you're in the market, might want to pull the trigger sooner than later. But at the beginning of this year, Cox Automotive did say it expected wholesale prices on its value index to end this year at 2% higher than December of 2025. And look, it fluctuates, right? They say at the end of the year it'll be at 2% higher, but doesn't mean in the meantime you can't have big blips out there. We're at 4% there for February as well. So, hey, speaking of cars, if you have a Ford, I found this story very interesting here because it kind of goes to the manufacturer, the care of manufacturer vehicles out there. And it's been noted by several outlets out there that over the past several years, Ford itself, well, they found themselves in big problems because they have recalls sweeping through basically every model of its lineup between 2020 and 2026. I'd say almost all because there's one model that didn't have any recalls, but all the other ones do. Only the Ford GT, that was a mid-engine two-seater sports car. That's the only one that escaped the recalls there that the rest of the lineup is having. So interesting that that's the one car, right? And it was actually discontinued after 2022. So in those 2 years, it didn't have any recalls. Maybe they got out at right time. But that model there, the GT there, paid homage to the iconic Ford GT40. That dominated the 24 hours Le Mans back in the 1960s. If you can think of that style, if you're a car person, you kind of know what that style looked like as well. So the Ford GT second generation voided recalls, but they still had and experienced some issues out there. It wasn't like they were perfect either. The second generation had hydraulic defects and things, but not enough to go to a recall. Well, here's the issue for Ford. Enough of what the car that avoided all that, right? Let's get into what Ford's been dealing with. In 2025, Ford set a record for most recalls issued by a single automaker in a single year. Hey, we're number one. They issued more than 150, nearly double the previous record of 77 set by General Motors back in 2014. Now, they blame that huge any increase there. They blame it on aggressive strategy of initiating voluntary recalls before major incidents or widespread complaints actually happened out there. So they say they're being proactive on their building manufacturing issues as opposed to waiting until a recall's out there. So over these last 6 years, 16 Ford models, this spans the SUVs, crossovers, trucks, pickups, cars, even commercial vans, they were affected by recalls, totaling tens of millions of vehicles. So in the seven SUV and crossover models, these would be the Escape, Bronco Sport, the Bronco Explorer, the Expedition, the Mach E, by the way, is included in this, even the Ford Edge. Well, they've all been subject to at least one recall. Now, it could be minor issues on the recall, things like or even big issues out there. But inverted or blank rear view camera images, cracked fuel injectors that pose fire risks, software faults are big ones with Ford as well. They could cause brake malfunctions and electronic door hatch failures, which means people can be locked in their car, I should say. And you can't get out of it. All five major Ford truck and pickup models, that would be the Maverick, Ranger, the F-150, both the electric, which is the Lightning, and then, of course, the gas one, but even their Super Duties. They've all been affected and had recalls. The most widespread problems involve electrical faults with the trucks, and those things can do dangerous things like disabled trailer brake lights, turn signals, braking functions while towing. Yeah, obviously, and not a good deal. It can increase crash risks out there. But even like I said, the commercial vans have been guilty of this. The Transit, the E-Transit, the Transit Connect, the smaller one, they've all been recalled for problems involving braking, towing, electrical systems, and visibility as well. So, is this interesting? Ford, it's like they're putting vehicles out there, going, "Oh, we'll deal with recalls later." But huge amounts of recalls, but not just huge amounts. The types of recalls that they have are serious safety issues with the electrical and things to that effect. And just things we got to deal with here in 2026. Technology is supposed to be getting better, make things safer. Well, we'll have to see where that story goes here coming up as well. And when we come back here at McCollum on Business, we keep the show rolling. Of course, market's been open for about an hour here with the time change. We'll get you updated on that. Look at those airline stocks, and then we'll hit up a couple of local stories, including what has gas prices specifically done here in Arizona since last week. We'll get you updated on that, folks. Come on back. McCollum on Business. And we're back here, McCollum on Business. Woo, busy Monday morning with lots happening over the weekend here. Of course, you just saw the Real Matrix ad there as well. Don't forget, Fridays, 10 o'clock here, Robat TV. You get the new episodes out there. Noon on Rumble is where you can find the video of that there on the free platforms. Go to Rumble for the Real Matrix. And, of course, you have the free podcast there as well on your favorite podcast system, The Real Matrix. Just search for that or The Real Matrix Angry Patriot. It'll pop right up for you on the free podcast systems as well. Don't forget also, right after this, McCollum on Business, we get into the main event. Busy weekend. Of course, we had IndyCar, NASCAR in town this weekend. We get into the Suns World Baseball Classic happening as well. Lots of football news out there as we are officially in free tampering time frame. Big 12 men's basketball tournament kicking off this week as well. So we got a lot to talk about after the weekend there on the main event. Come and join us live Robat TV 8 to 10, of course. Afterwards, find us on the production YouTube channel, TME Media AZ on YouTube, or TME Sports Show, or just search the main event with Steven or the main event with Dale. It'll pop right up for you on the free podcast systems as well. As soon as we're done here, well, we get this out and up on the YouTube page as well as Robat TV for on demand. No podcast for this show. The pit stop for last week, well, it's all done. It was up on Thursday. This week, we're going to do a combined look back show coming up on Wednesday, and of course, a look ahead show this weekend to Las Vegas out there. We appreciate everything you guys do to support us. Just like and subscribe to the podcast, like and subscribe to TME Media AZ YouTube page, TME Media, if you're on Rumble as well for the Real Matrix. Just helps us promote it out there a little bit. And that's what you can do to help us out around here as well. And folks, with all that being said, let's get back into the Market Watch. Everything is disastrous today, right? Not right where we were. And yes, folks, the Russell 2K, for some reason, the service we used to put this out there, well, their NASDAQ link has been broken. And now their Russell 2K number is completely wrong as well. Russell 2K is down today, folks. It's not up at 41 points and everything. Well, the Dow Jones down 668 points right now. The S&P 500 down 75. The NASDAQ down 208. As we told you, the Russell 2K is down actually about 59 points right now as I see here on my updated pages here on my computer. Then you see Bitcoin. It is up 3,200 points today, but still under 70,000 here on this Monday. Obviously, oil is triggering stagflation fears. Oil is triggering a lot of fears around the economy, and that's what's driving the stocks to do what they do today. And we're going to look at airline stocks now. First one, Delta Airlines out there is what we're going to look at. Down 5.80% here. And the market's been open for about an hour now as well. And Delta Airlines down 5.67. Throw up American Airlines. Let's look at the big three. 6.17% down here for American Airlines here today. And then finally, United Airlines as well, folks. I can just tell you it's down as well. So is Southwest. So is all of them. 7.45% down for United Airlines. Obviously, gas prices are a huge problem. I saw United Airlines CEO did say fares are going to go up because of gas prices, and they're already ticking up. He came out and said that over the weekend or early this morning. The other problem that the airlines are having besides oil prices is kind of a double whammy right now. If you saw anything on social media, you watched the news this weekend, or anybody tried to fly this weekend, TSA staffing shortages with that DHS shutdown that is continuing here, that partial government shutdown, is starting to affect the airports. People aren't showing up to work. They're calling in sick. So airlines are now under pressure with those TSA staffing shortages. People are just going to refuse to fly if they have to stand in security lines for hours on end to get on their flights here coming up. So airlines are in a tough place right now, all way down here today, early on this Monday morning as well. So let's get into some local stories here. You know, we talked overall about the national gas prices with they're going well over $100 a barrel over the weekend, 110 here early this morning. Well, what does that mean for Arizona? Because obviously, you know, and I'll go to some numbers at the end of last week here as well. And we know that the oil prices really started taking off at the end of last week, like around Thursday. The U.S. crude shot up, for instance. On Thursday, that was the highest level in nearly 2 years at that time. Obviously, it's been higher since. So just on Thursday night, the price of regular gas here in Arizona jumped 14 cents per gallon. That's not Arizona. That's Metro Phoenix, by the way. So Thursday night to Friday. According to AAA, at that time, the average cost per gallon in Phoenix was $3.91 on Friday morning. Right? The previous day was at $3.77 on Thursday morning. So Valley gas prices have now risen by 44 cents in the last week, 75 cents in the last month as well. So it's not all this Iran, situation, because that didn't officially kick off here until just a week ago as well. Now the statewide average, if you're not in Maricopa County, you get a little bit of a reprieve, but it is also rising. So the state average on Friday was $3.70. It was $3.58 on Thursday. $3.29 a week ago, and $3.10 a whole month ago as well. Yes. Only 6 states are paying more at the pump than Arizona. Yay, we're number six. Obviously, California is leading the way. Their average price is $4.90 per gallon. We get these from AAA also, by the way, as of Friday. I did see over the weekend some prices down in Southern California, some of those ritzy neighborhoods. I was seeing $8 a gallon, $7.50 a gallon in some of those areas. The national average on Friday, well, it was up to $3.32. That's 34 cents higher than it was a week ago. And of course, as you know, driving around this weekend, prices have gone up even more as of now. So I don't know. We don't know when the relief is going to be coming. So fill up, relax, don't drive as much, and just do what we can here to get through this time, of course, out there and what we are dealing with it. And remember the State of the Union address when President Trump said that he would like to see data centers create their own power to not affect so where yours and my power, right? We talk about this with APS all the time. Your APS customers, the homeowners, don't have to keep getting price increases because of the demand that the data centers are putting on the grid. Well, President Trump floated that out there and everything, and now, here in Arizona, the Arizona Corporation Commission kind of controls that, not the president. So, and the Corporation Commission is behind that, but what kind of deals are they making here with these data centers is kind of the question that we're dealing with. We know Google, Meta, Microsoft, OpenAI, XAI, Oracle, and Amazon Web Services have signed on to that president's pledge to create their own power sources so it doesn't affect, you and I as regular consumers out there. However, the three major data centers here in Arizona, well, they're being developed by companies that didn't sign the pledge at all. Yes. Consumer advocates and others are, they're skeptical on Trump's pledge and how that can be done here by the Corporation Commission. But, these three here are not, did not sign the pledge. That means they cannot just ignore it, right? Going forward is kind of the thought that people have out there as well. So the commitments that the president wants to see is simple: building, bringing, or buying new power supply, paying to upgrade power delivery infrastructures, paying for power they have to access to whether they use it or not, investing in local job creation and workforce development, and also contributing to electric grid and community resilience. That's the pledge that the president put out there and things to that effect. But the president can't enforce that out there, especially here in Arizona. What matters here is the Arizona Corporation Commission and what they put in for these data centers and the regulations because they control the utilities here in Arizona as well. So utilities are allowed a modest profit, and they do have to eat a little bit of profits in order to expand their capacity. They're able to do it because they don't have to make a ton of money in respect and things to that effect. So the Arizona Corporation Commission, who regulates the utilities out there, their chairman at least does back what the president pledged and what he wants to do out there. He said his agency can only, quote, mitigate the impact as much as we can, unquote, as well. Yeah. So the biggest data center being built here in the state right now, are currently planned. That's the one south of Eloy. That's Vermaland is what it's being done. They're developing a 3 gigawatt project. They did not sign on to the president's pledge out there, so they have no obligation to pay for the required expansion of electronics capacity at all. So they're going to drive up those electricity costs, not just for Eloy, but probably the whole state as well with that demand as well. So you know, what the way it works is, if you don't know, and that's why APS is trying to do a large price increase right now, is they pass along infrastructure costs to customers when they set their rates. That's why you're seeing larger rate increases now. One of the reasons is because they're having to build more facilities to generate power, more power plants. They more have to put more, solar panel grids out in the desert and things, which obviously costs money. That just eventually gets passed along to you as well. So that's the dilemma here that we're looking forward to as well. APS, of course, is seeking that 14% rate increase, on that average. And we told you they want to put more on the data centers out there. They say residential customers are facing a 16% increase. Data centers have a 30 to 45% increase as what they want to do, APS as well. So maybe that's the trend they're going towards if they can pass it through, but still, 16% increase for homeowners is ridiculous out there. So even though the big ones, we do have Google out there in the East Valley. We have Meta out there in the East Valley as well. The Meta one is huge. I drive by that every day. They do have power plants there at Meta. Ironically enough, you see them there, battery storage plants and things to that effect there. So, KJazz giving us that good news in conjunction with Cronkite News. And look, they just need to figure this out. And if you're going to build a giant data center, build your own electricity. To me, it's a simple thing. They obviously don't want to spend the money, right? Hey, out there in Gilbert, you know, well, there's a company out there. Let me start by saying this: Popstroke. It's a Tiger Woods backed company. It's a putting greens. You have them, a couple of them here in the valley as well. Well, they're changing their plans for their upcoming location out in Gilbert as of now. So, Popstroke, a year ago, they are, received the thumbs up from the town of Gilbert. I had to think what we were talking about here. And they're going to build an indoor mini golf facility, 4.25 acres of vacant land at Ray Road and Santan Village Parkway was the plan out there. And it's right there by the Top Golf, the main event, if you know that area very well. It's going to be south of that coming, and that Santan shopping mall out there. Popstroke asked the commission to consider a change to its plan, though, now. They want to be allowed to build the proposed 36-hole miniature golf course outdoors. I know there is one outdoors. I believe it's in the West Valley. Maybe it's up north there in Scottsdale, but it is an outdoor one there as well. The Gilbert Planning Commission on March 4th did approve the plan unanimously and without any discussion on the change. So instead of an indoor, going to be an outdoor facility coming up as well. So Popstroke said it would build a 64,306 square foot building. This was when it was going to be indoors. They said it would contain a 36-hole indoor miniature golf course. Now they want to build a 53,000 square foot 36-hole mini golf course outside. As well, they want to also have a 4,000 square foot outdoor turf play area, 2,500 square foot outdoor playground as well. So if you had hopes of putting outside the heat here in the Gilbert area, well, it's kind of going away now as well as they want to build it outdoors. Something tells me that's a lot to do with the building prices out there, is what they're trying to get around as well. And staying in the East Valley, just an update here because this is out by me and out there in the East Valley, and it's had a lot of turmoil, right? The previous owners, father and son, have now going to jail because of some fraud stuff. But the Arizona Athletic Grounds, 2 years into the new ownership out there, they experienced significant growth last year as well. So they saw their number of visitors increase by 16%. So it's above 2.8 million people from 2024. All 50 states guests came to these facilities to play sports and, met entities and things to that stuff out there. And as I said, big growth here in the second ownership. Just goes to show you when your owners don't commit fraud and all that good stuff, you can actually have some growth out there, folks. Whew, what a Monday to be alive right here with the business world. And appreciate you joining me here this morning, whether it's live at Robat TV or, of course, on demand on YouTube or on Robat TV. We appreciate it very much. We got the main event coming up, 8 to 10 a.m. Tons of stuff to go over there as well, folks. It's a busy Monday. Stay with us all day here on our programming. We'll see you tomorrow, 7 a.m. here, McCollum on Business.